In this trading series, the whole idea is to create longevity in our trading career. Meaning trading should not be a short-lived adventure, but we should trade till right into our retirement age. And it applies to all jobs. Even then, at my retirement age, I believe I will still be trading. We all may have read that many build their fortunes in their business, investing, or even trading. And suddenly, most of their net worth reduced substantially almost overnight. And this is what I mean, they are running it without longevity. Let us focus back to trading. Trading can be non-stressful. To me, trading is a very fulfilling job where we understand there is a framework to recognize opportunity and risk from different markets. And my role, your role, is to eyeball both that opportunities and risk and then make decision whenever we identified either one of them. And in this trading series, today being the first part, I am going to share with you my experience on how I do that. Having a game plan on investing and trading into longevity. Today's topic, we will discuss the buy strategies. Alright, let's get started. But before that, let me just share with you the framework for today's curriculum. And I'm going to share with you a simple and easy to understand buy strategy for both the pros and the aspiring traders. And this buy strategy, it can be applied for both the long-term investor and the short-term trader as well. On the first part for the long-term, I'm going to bring you back to a case study in 2008 and 2009 crisis, how we apply this strategy to identify the turnaround. Then we're going to use the same techniques and apply to today's market on the minutes chart. But before that, let's take some time to look at the disclaimer down here. Before we get into the buy strategy for the 2008 and 2009 turnaround, we have to understand about how to draw a trend line. And there are two rules to draw a downtrend line. Now, first of all, we have to find at least 3 significant peaks. And then we try to connect them, the 3 significant peaks at least, or 4 of them or 5 of them, to its best fit. Now, let me just repeat again. The 2 rules are, number 1, find at least 3 significant peaks. Then we connect them at its best fit. Now, how about the buy strategy? Now, the buy strategy is, there are 2 parts to it. Number 1, it break above the classic downtrend line. And number 2, I would prefer to buy on retracement. So we will get into the case study of 2008 and 2009 right now. This is the monthly chart for the Dow Jones Index. And before we get into the buy strategy, let's look at this downtrend line. And let's apply the 2 rules, at least 3 significant peaks that we have to identify. And I think that's 1, maybe 2. Let's try to join them together. And maybe we extend it. And the rule number 2 is that we try to find the best fit. We just make adjustment like this. And as we adjust, I think I found the line here. So later on, we're going to apply this to the minutes chart on the most current market and see how it works. And I think that this is a almost a classic downtrend line. On the second peak, it almost touches, but I think it's pretty good. And on the identify the buy strategy, there are 2 parts. First part is that it has to break above this classic downtrend line, which it did. And I would say that this is a piercing body. It pierced right through, pretty aggressive, above this downtrend line. And the next part is that for the more aggressive traders, you can choose to buy on the next period. But personally, I prefer to buy on retracement. I think the downside about buying on retracement is that sometimes I may miss out a trade completely. But I guess it's alright because the opportunity is always in abundance. If I miss out on this one, I can always wait for the next one. So there's no which is better. It's just my personality, I prefer to buy retracement. But if you find that on this note, the piercing body, it is good enough, just go ahead with it and make sure that you have to recognize where to risk it, which is around this low. So you just have to calculate where is your measured risk. Now let's move on to the second part on the shorter time frame right now. And we're going to study into the 30 minutes chart of the Dow Jones. This is 30 minutes of the Dow Jones Index. Later on, we're going to come back to this chart again to see if you can apply the buy strategy for the current market. But before that, I think I would like to do one more case study, which is the recent all-time low. And that's about here, before 17th of October. And could we apply that strategy to work here before this turnaround? Now, let me just go back to the 30 minutes chart. And I need you to bear with me for a while, as we're going to take a little while to go back to before 17th of October. Okay. All right. As you can see, it's still uploading. And I think we're almost there. Yes, we're here. And that's the recent all-time low. And the rally has been very encouraging. But can we apply what we've learned to back then? Now, what impressed upon me back then, it was this inverted hammer. So this inverted hammer is considered what I consider as a significant peaks, and we can always work backwards. Now, as we look at the past, we could see obviously that was a downtrend line, and I'm going to draw a downtrend line and to find at least 3 significant peaks. Then we try to find the best fit. And I could do some adjustment, right? To find at least 3 significant peaks, then we try to find the best fit. And maybe I want to put it somewhere at the neckline of this inverted hammer. And I may want to just extend a little bit and try to find the best fit. And that's what I saw back then. That we could see that there was 1 significant peak, followed by 2 and 3. And then on that evening itself, my evening, in Asia, that I saw that was a classic downtrend line and it surged above, and this is what I'm looking for. It broke above this classic downtrend line, and usually I would prefer to buy on retracement, and of course the rest is continue to move up here. So that was a very good run in the Dow Jones. Now let's go back to the 30 minutes chart to look at the now and see if we can apply what we've learned to the current market. And this is what we're going to do here. And what's my take for the Dow Jones at this point in time on the 30 minutes. Now, let's try to apply some rules here. And we just play around with the trend line. Now, let's find, maybe we start from here. And I may want to expand a little bit here. I find that this is pretty interesting here is that we could see at least 3. This second peak, it was significant. It broke a little bit, but I would still consider that as pretty not too bad on this downtrend line. So there was 1 significant peak, 2, and 3, maybe I'll adjust a little bit lower. In any case, I think it's pretty good. But we could see on this pretty classic downtrend line, there was a surge once again. As it surged out, it moved, and I would say that at this point in time, it's still on the retracement phase. And this is what I'm going to expect if you say that for today and the next few trading days, what's my expectation? Because of this setup, it broke above this downtrend line. And I would say that this could be a retracement. And my expectation for the Dow Jones is as it broke above, let me just try that. I'm suspecting that as the next few days, it may develop into this uptrend. And I always advocate that as a trader, you have to know what you're dealing in, what you're trading in. And what we're studying here is the E-mini Dow Jones Index Futures. And the minimum fluctuation, it states that every 1 index point, it is $5. And I took the liberty to convert it to 10 points is equal to 50, and 100 is equal to $500. And it helps me to measure my risk. Now, what if I'm on the wrong side? 100 points against me? Will I be able to stomach that 500 US dollars? So choosing the right contract, it is important. And of course, on the daily movement, 100 points is easily on the score. Now, however, if you find that the contract is too heavy, I think the good news is that there's this micro E-mini Dow Jones futures is 1/10 the size smaller than what we're looking at here tonight. Now, so if you're an investor or doing some back testing on trading, it is alright to use delay data. But if you're already trading, please do not save on the fees for the live data feed. Now, there's a useful feature that I use to help me to eyeball trend. And later on, of course, with trend, we're able to find buy strategy. Now, let me just share with you what do I use. Let me just go back to the daily chart. Here it goes on daily chart. Now, if you could see that there was this feature, so it's pretty useful. I know it's a bit complicated right now. So basically, as you could see that as I click on this trend, this platform just suggests to me what are all the available possible trend. And it kind of helped me to eyeball. Now let me just see what I'm seeing here. And I kind of like this. Okay, I want you to narrow down to, now the system here is, it is suggesting what are the current possible trend right now. So I want you to focus on this itself. Now, I could see that there was 3 significant peaks. This is what the system suggests. And I would prefer to do some manual work here. That I could see there's 1 significant peaks here. I want to focus on this green line. 1 significant peaks, 2 and 3, and it just broke the last few days ago. And I kind of like this green line. 1, 2, 3, and it just broke. And it could be a retracement before it starts to move up. Let me just show you what's my expectation. It just broke. Oops. Broke this. Yeah, so that's what I'm seeing here is pretty much of a useful feature. It helped me to eyeball for opportunity. And the next part, we will discuss on the sell strategy and the subsequent parts on the different strategy and how to manage our trade and our trading fund into longevity. I will have at least 1 live session every quarter. So below is a link that you can register for my coming session. Also, if you find my charting platform useful, you can apply the discount code provided there as well. So feel free to leave any comments below. I love to exchange ideas with you. And for more market insights and tutorials, I hope to see you again very, very, very soon. Thank you for staying true, and you have many great trading weeks ahead.